Hello, my name is Bob Lovinger. I'm the president and founder of Flexxbuy. We're a leader in the customer financing space. Today I'm going to go over everything there is basically to know about customer financing and how it can help your business. Um, I got involved in customer financing about 8 years ago, and I've spent my entire career in financial services. But after the financial crash, I noticed that um, people didn't have access to credit cards anymore the way they used to. They didn't have that disposable spending ability that they had prior to the crash, and the credit card industry wasn't adjusting as things started to get a little bit better. And I noticed in the industry, I looked at the customer financing arena and I said, this is something that's wide open. There's, very few big players, and the big players that were there focus on a very narrow scope of businesses. They basically all wanted either, box retail stores or certain verticals like medical, where, care credit was strong in. But for the most part, businesses were being ignored when it comes to customer financing. So they were relegated to taking cash or credit card. And if somebody didn't have access to one of those two means of paying for a large purchase, they were out of luck. So I noticed an opportunity. So I got involved in the industry, and I got involved with a product I no longer am involved with, but it gave me my foothold into the industry. And I got in my car and started driving and going door to door, knocking on businesses' doors and finding out what businesses needed, and what they were looking for. And the one thing back then was that sometimes you had to educate businesses about customer financing. They didn't know it existed. They certainly didn't think it applied to them. They knew about the industries that were getting it, but they didn't know that their particular business can qualify for customer financing. And then the other thing I noticed about business owners was, a peculiar thing, and it's just probably human nature. The people I would talk to, whether it's a business owner in most cases or sometimes a manager, assumed consumers were just like them. So if they had good credit and had access to credit cards, they didn't see that there was a need. They didn't think consumers were having problems, at least to the extent that they were having. So, I learned a lot about human nature and about businesses in general. So I set out to try to solve this issue. I set out to first, we have to educate businesses about what customer financing is, and I had to come up with a broad enough product lines that can handle consumers across the board, because some of the big players, like for instance Synchrony, who's been around for a long time, they're looking for people with prime credit, 680, 700 or higher. The average consumer has a credit score below prime. So they're not looking for the average consumer. They're looking for the cream of the crop. Then you have the no credit options that are available in the retail space, like from a Progressive. Progressive is, it's probably, they've been around a very long time. They got a strong product, but the no credit product comes at a very high cost to the consumer. So the people with better credit are not going to be happy with the terms they get from a no credit check option. So, my goal was, I want to be able to cover as many businesses as possible with customer financing, to give them the ability to do what the big businesses do, and also be able to capture as many of their customers as possible. Um, to broaden their net, because the worst thing from a business standpoint that could happen is you do everything right. You do your marketing, you do your goodwill, you get people to come to your business, and then you can't service them because they can't figure out a way to pay. Now that's always going to happen, but with customer financing in place, and the right kind of customer financing in place, um, we can minimize that. So, I'm not going to be talking so much about FlexBuy as much as I'm going to be talking about um, customer financing in general, but obviously I'm going to relate it back to Flexxbuy because that's what I know. So first of all, what is customer financing? So customer financing provides customers with an option to buy now and pay later if they qualify. So there are three types of products basically out there. You got the third party lender lease companies where the funds, after approval and funding, the funds go directly to the business. Then you have the second option, which is a third party lender where the funds don't go to the business, they go to the borrower who then pays the business. And then there's in-house financing. I'll talk a little bit more about that later, but that's where the business basically finances the transaction themselves. And this is good for a certain type of businesses, and it's a very strong option. But these are the three basic ways that businesses can offer some kind of buy now, pay later. So here's what I'm going to discuss. Why your business needs customer financing to survive and thrive. Who are the providers of customer financing? So I'm going to go into some specifics and talk about providers in general, but also show you some of the providers that are out there. How your business can get set up with customer financing. I'm going to go through step by step what you need to do to get set up with customer financing. What are the best practices and uses of customer financing? So you have it in place. Now what do you do? And then I'm going to give you some actual case studies of businesses that use Flexxbuy's customer financing. So, I'm going to show you, and and in these examples, I'm not going to give you the furniture store because, there's a lot of examples of that. I'm going to give you some different type of businesses that you wouldn't think about from the standpoint of offering customer financing. So what is the consumer demand for customer financing? So your business gets it, but is there really a marketplace for it? Are there really people out there that need customer financing? So here's what we know. 80% of American workers live paycheck to paycheck. Now we found that out a number of months ago when the government had a shutdown, and all of a sudden, a ton of government workers ended up on going for food pantries because they didn't have enough money to even buy food for their household. People are living paycheck to paycheck. They don't have room for any kind of emergency. They're just scraping by. 69% of American households have less than $1,000 in savings. I mean, think about that. I mean, 69%. I mean, that's a tremendous. A lot of people are out there on the ledge, and just one thing can just knock them off. Most Americans have little to no access to credit cards. This is anecdotal, but it's absolutely true. A lot of people have credit cards, but the credit limits are very small, or maybe they've used up most of their credit cards. Most Americans do not have enough available credit to handle an emergency. And what we're talking about here with customer financing and the product, it's not just emergencies. It's also people that really want things. All right. So when the economy is better, and it's been getting better over the last 8, 9 years, people want to start participating in it, right? They want to start getting those things they really want. They work hard. They provide for their families, and they really want certain things in life. And so sometimes those strong wants are as powerful as those needs. 77% of consumers making a major purchase seek customer financing, and 45% that purchase say they wouldn't have if not for financing. So think about this. If you're a business out there, and it doesn't make a difference how you sell, whether you're selling face to face out of a store, whether you're selling at someone's kitchen table, whether you're selling over the phone or over the internet, people that need financing understand that they don't have the money to make the purchase any other way. So they're going to need some kind of third party help. And they're going to go online and they're going to search for options. So if you're a business right now that doesn't offer customer financing, you don't even understand to what extent you're losing business, right? Because the people that could possibly be your customers are never contacting you in the first place. They're contacting your competitors, or in many industries, if there's no one that offers customer financing or some kind of third party, buy now pay later approach, they're just staying home, or they're never picking up the phone, or they're never trying to even make that purchase. I mean, why should they? Nobody wants to be embarrassed or, not, or disappointed when it comes to making that purchase, right? They want to be able to follow through if they find something that they really want. So this is a very important statistic that you really have to keep in mind. Consumers with means don't want to utilize savings and prefer not using credit cards. Now, this is important, right? Because everybody assumes customer financing is just about that person that's desperate. They don't have any money, they don't have any credit cards. But there's another category of people who, they have credit cards, but they understand what those credit cards are for. They want to be able to have them for a real emergency, or if there's an emergency now, they prefer not to use it and save it for the next emergency. Um, they also, a lot of the people that are more savvy when it comes to consumer credit understand the effect of using your credit cards on your FICO's credit score. So the probably the largest ingredient of a FICO credit score is the amount of debt you have in relation amount of credit card debt you have in relations to your credit card limit, right? So once you reach a threshold, and the threshold is very, very low. So once you go above 30%, it starts impacting your FICO score. When you get higher, 50, 70%, your credit score is really taking a dive. So taking out an installment loan doesn't play into that. It's and as a matter of fact, taking out an installment loan often helps your credit score because it will add payment history to it. So people that are credit savvy understand I don't want to use up my existing credit line unless I really have to. So, I'd rather take out something entirely different just for this transaction. So this is important. Consumers want customer financing. They need it. They're hearing about it. They see the ads. So they know these things exist. And if your business isn't offering it, you're losing out on those people. So why doesn't every business utilize customer financing successfully? Um, Most businesses, first of all, are unaware that they are eligible to offer prospective customers a buy now, pay later alternative. As I mentioned, it's very widespread in certain industries, and small businesses always assume that large businesses have everything at their disposal, so they think it's not for them. And I found that out, when I went around door to door, and later when I spoke to businesses on the phone. Many businesses underutilize customer financing because they fear or are frustrated by the one-off lender implementation process, leaving them with a one-size-fits-all solution. So what a lot of businesses do is they'll get customer financing, but they'll get one lender, and they'll assume that they're all set. So you know that process of getting approved may have been brutal, and so they said, all right, I got my lender. I can now say I offer customer financing, and that's it. I'm all done. But here's the thing: no matter where you ended up with your one lender or your one program, if it's at the top of the spectrum where you're looking for people with prime credit, you're going to miss out on the people that know that they don't have prime credit. So let's say you're a business and you have Synchrony, and a lot of businesses do have Synchrony, and Synchrony typically, like I said, 680, 700, usually closer to 700 or higher as far as the FICO score, and that's considered, very good credit. Um, a lot of people have already tried it. I mean, because Care Credit is Synchrony, right? So a lot of people may have gone in and tried to apply for a Synchrony, some kind of, a Synchrony financing, and they've been turned down. So if your business offers Synchrony, these people are not going to bother trying again because they're going to be disappointed or embarrassed. They don't want to get turned down. The same thing at the bottom end of the spectrum, right? So, as I mentioned before, not everybody wants that lease if you're buying that furniture, because guess what? That $1,000 sofa is going to end up costing you $2,000 using that no credit check option. So if somebody's got better credit, or even somewhere in the middle, they prefer something better. Many businesses fail at properly managing their customer financing a solution. and I'm going to go more into this in a little bit, but it's not enough to just bring out customer financing at the point of sale. You got to go much deeper than that to get the most out of it. Now, some businesses do. Some businesses, and they're happy with the results of, I'm just going to bring it out when I absolutely need to. But I'm going to show you that there's a better way to use customer financing. Most customer financing companies and lenders only seek large merchants in specific verticals, leaving most businesses on the outside looking in. I've mentioned that before, so you unless you dig deep, the perception is that big businesses and furniture stores have customer financing and nobody else does. And many consumers are seeking out only businesses that offer financing options because they don't have the cash or available credit to complete a sale, as I mentioned earlier. So what can customer financing do for your business? I mean, some of these are going to be obvious, but I'm going to mention them anyway. Increase sales on people that contact your business but won't buy using their existing payment options. So you found one of these people that came in unsure of how they're going to pay. They didn't do they're one of the minority of people that can use customer financing but didn't do their research, so you had a crack at them. So a lot of businesses will say, all right, you know what, before you leave, let me try, let me give you this. It will definitely increase your sales that way. It will increase the number of people who contact your business in the first place. So if you're going to do what I'm going to recommend and show you how to do, you're going to let everybody know that you have customer financing, whether it's putting it on your website, whether it's putting it on your company vehicle, whether it's putting it even in the store window, whether it's putting it on the flyer that you send out or in your advertisement in your local penny saver. Whatever you do, if you put the word out, you're going to increase the number of people that contact your business, and these are people that you would never have a crack with otherwise because they're doing their homework. It's going to increase your sales amount. So, this is obvious. People that use financing and if you break down the sale into a monthly payment, are thinking in terms of what is this going to cost me per budget rather than a set amount. So people that use financing will spend on average 20% more than people that don't use financing. It will bring back previous customers. So just because you've had a previous customer and they could be happy, don't assume their situation is exactly the same today as it was back when they were a customer. So they may have had a credit card to use back then, or they may have had some cash in the bank. Maybe they got a tax refund and they were able to buy your product or service. So if you go out there and you nurture your previous customers, it's going to bring them back into the fold. And guess what? It's also going to increase the referrals. So people that are happy and people that know that that you offer options of how to make a sale happen, especially if you got a large ticket. So once you cross over that $1,000 or 5,000, the higher you get, it's much more limited as far as who can actually afford to make that purchase. So it's going to increase people talking about you and letting everyone know about your business. And it's going to create a bigger image because remember, your perception was that only big businesses can offer customer finances. A lot of consumers have that same impression as well. So if you're offering customer financing and letting the world know, it's going to make your business seem larger. So, I'm being a little redundant here, but I really want to drive this home. The misconception, only large businesses and businesses that sell consumer goods can offer financing to their customers. Here's the fact. Almost every business, regardless of what you sell, how you sell it, how long you've been in business, and the size of your business can qualify for customer financing, not only from one lender, from multiple lenders. So the three ways your business can utilize customer financing. The minimal viable approach. Suggest financing to a consumer when all else fails as a way of saving a lost sale. So somebody comes in, you're trying to sell them on, you're getting them excited about it. They're excited about it, but they just haven't pulled the trigger. You bring out customer financing, It puts its cape on, it's a hero, and now it saves you a sale. That's okay. You'll make money in a lot of businesses, and actually, the vast majority of businesses use it this way, and it works for them, but it's not the best. A better way: make financing part of your pitch at point of sale. So it's not enough just to say, when you're about to lose a sale, bring it out. Make it part of, you could pay by cash, you could pay by credit card, or you can pay using financing. A better way is even to say this: you can buy this for X, or you can buy it for X amount per month for X number of months, or approximately X amount per month, because a lot of the programs don't, you can't determine an exact amount. So make it part of your pitch, make it part of your sales presentation. Let people know that there are options. The best way to use financing: make financing part of your marketing and sales strategy to drive people to your business and close the sale. I spoke about this earlier. Put it out there. Put it on the website. Put it everywhere your business is mentioned on your social media. That's a big one. Let people that are following you on social media, and if you're not being followed on social media, get followed on social media. Let them know that you offer financing. So lead with customer financing on your website advertising and marketing to drive people to your business. A couple examples. Hopefully you can see this. Here's a business over here to the left. Apply for financing options. This is a Flexxbuy a client. So they click on it. It brings them right to their customized Flexxbuy application page, and then then the consumer can apply for financing before they do anything else. So it lets them know on the website that financing is available. And here's another option of, somebody puts out an advertisement: easy financing available. Now this isn't subtle. This is big. This is right up there, right? 2 places, financing available. 3 places, financing available. They don't have it on their truck, so that's a little bit of a mark against it. But they should have easy financing available. That same logo on the truck. But it certainly works this way. This is, an aggressive way of doing it, through advertising. So let's look at the auto industry. Okay, so everybody, now it's a foregone conclusion, unless you have much more means than I do, that when you go out to buy a car, you're going to finance it, right? You're not going to buy. You're not going to lay down. You're not going to, write out a check for $30,000, or whip out a credit card and pay for $30,000, or even get a cashier's check in most cases for $30,000. You're going to use financing. So there's 3 approaches to how you advertise if you sell cars. One is you can sell based on price, and now you're mentioning here's the price, here's the rebates, and all this other stuff, and here's the net price. And some consumers are going to be drawn to the price because that's how they shop for a car. The other way to do it is you let people know that this can be had for a month, a reasonable monthly payment. So which one, if you're a consumer, if you need financing, let's say, which one is going to be more appealing to you, right? It's going to be probably the monthly payment, though if you're shopping by price, this may be. Now, the other option is a lot of car sellers will do both. They'll say you could have it for this price or this amount a month, this amount per month. Now, there's a disconnect between those 2 offers, right? Because the person that finances is probably not getting all those rebates, but it uses up 2 parts of your brain. One is, here's the price part, and here's the amount, on my budget. Now, when you go to sit down with a finance manager at an auto dealership, chances are that prices become totally blurry. The only thing that matters is getting approved and what the monthly payment's going to be. So it's, car sales would not exist. I don't even know what the what the auto industry would look like in this country if financing didn't exist for car sales, because, as I said, people just don't have that ability to lay out that much money. And there are countries where financing doesn't exist, to this extent. So, it's a big issue. That's why in America, people are driving so many new cars, while in other countries there's a lot more, of recycling of cars. So here are some ways that you can promote financing. You can advertise start as low as 200 per month. Here, no price is mentioned by this Butler RV Center. No price is mentioned whatsoever. They're going right to the part of your brain that says, how much am I willing to slot towards my budget? Again, just 5 monthly payments of $95. You don't have to think. You don't even know. I mean, you could do the math and see what this is going to cost you, but all you're thinking about is I got to do $95 5 times. This one on the bottom, customer financing available. They don't even have to mention a number. They just know that, hey, it's financing. Financing is available. So it gives me an option. And here's one that combines both. It's kind of on the lowest side, but it says you can buy for this amount and pay only this amount. So it's giving you both sides. So now you can say, all right, it's only costing me $800, but that's really only 47 per month. I can do that. That's easy. So who offers customer financing? Now this is not obviously comprehensive. There's a lot more players in this industry than these, and these are just some of them. But these are direct lenders that companies that either use their own money or use money from Wall Street or whatever. But it is their banks or their leasing companies, and they all operate in different sectors. Some of these are just online, some of these just do auto repair, some just do home improvement, some do a lot of things. They do more industries, but none of them do every industry. None of them will do everything, and none of them will do every kind of customer. So they all have a lane in which they're driving. So here are the pros of dealing with a direct lender. Most of them are well established with solid infrastructure. So they've been around a while for the most part. So they know what they're doing. They know their niche vertical. They've identified where they want to operate in, where they're strong, and what they want. They know their consumer lane as well. So if some of them want prime customers, some of them know that they're not going to be competitive with prime customers. They don't want to compete with Synchrony, so they're going to operate in the next lane, which is considered the off-prime or subprime lane. And then some of them are in the no credit space on consumer goods. So they know, what, I'm not looking, we're not going to get that consumer that wants 36 months and $7,000. We're going to operate in the $1,000 to $2,000, $300 to $2,000 range, and offer a no credit option, so people can buy it easily. And most of them offer favorable discount pricing to the business. So there's a cost of customer financing. I haven't mentioned that, but every one of these lenders and programs, there's a discount. Just like when you use credit card processing, and if you take someone's credit card and swipe it, you're not going to get 100% of the ticket. You're going to get 100% minus a certain discount that's taken off the top. The same thing is true with these lenders. So each one of these lenders has a discount of some sort. So it's going to come off the top. The discount may be 1%, 10%, to as high as 10%, depending on the risk factor, depending on the lender and the program. But most of these are not going to be in the gouging range of discounts. Now, there are some lenders out there, and there's a reason they do it, but they operate in a space that's really, really high discounts, 25 to 35% discounts. And there's some businesses out there that can withstand that kind of discount. They could feed off of only receiving 70% of their ticket because the profit margins are that high. But these are the ones I selected are mostly mainstream lenders and programs that will not gouge you. Here are the cons, and I mentioned most of them before. Mostly selective with regard to vertical and business. Each handle a consumer type, but none handle consumers across the credit spectrum. They tend to change business selection criteria often. So, I've worked with some of these lenders in the past, and the reason I stopped working with some of them is that they will arbitrarily decide, I don't want this type of business, I want this type of business. Or, I don't want every kind of business anymore. Now I only want businesses that do $2 million of revenue and higher. And they'll do it at the snap of a finger, and often they'll do it they'll do it retroactively, so they'll cancel out account. I mean, it's the most frustrating thing from my perspective of trying to service businesses and give them the best option to just have a business canceled, not for anything they did, but just because of the kind of business that they are. And they will cancel businesses based on corporate change globally or based on consumer performance. So there are some of the players in this industry. If your defaults or your late payments reach a certain level, they will cancel you, no questions asked, or they'll toggle you down. So everybody assumes if you go into a store, you go to a business, and you're getting financing from one of these players, and it's the same same company offering it in two different places. The approval rates may not be the same in those two places. They have the ability of toggling it to say, you know what, I'm going to make sure that for this business, I only really want their top 30% of their customers. We're going to screen it out and make sure that nobody else above below that criteria gets approved. And so that's what these corporate companies do. And if you have a one-off solution where they're the only option, you're at their mercy. Then you have multi-lender technology platforms. Now these are platforms that try to hit a broader range of consumers. So they may have lenders, that will do prime credit, subprime, and even some kind of no credit check option. The pros, they tend to handle certain niche vertical consumers across a broad credit spectrum, as I mentioned. They have sound technology infrastructure. So most of these companies will consider themselves technology companies, not necessarily lenders or even customer financing programs. They're more of a technology platform. The cons, they're selective when it comes to business verticals and business criteria. Now I could tell you some of the, two or three of these platforms only want you if you're $5 to $10 million of revenue or higher. But they all have some kind of criteria, either what vertical you're in, how much revenue you do, how long you've been in business. They just don't want every business. They're very selective. Some require approval from each lender in the platform. Now, I've been involved with platforms like that where they'll promote a 5-lender platform, but you have to have applications submitted to each one of those lenders and get approved by those lenders to be able to offer them. So, you may only, at the end of the day, for whatever reason, your business may only get approved by 2 of those 5 lenders. That's what your platform looks like. Lenders quick to cancel businesses based on consumer performance, same as I mentioned before. Higher cost to businesses. These platforms in general tend to charge higher fees to the business because they're charging you for the technology, and everything that goes along with it. And support is not generally a priority. And so they're good with the technology, but they're not going to support your transactions that well or support you as a business and help you get better as a business. So I didn't say I wouldn't do any self a promotion. So here's a little self promotion. The other option is a financing facilitator like Flexxbuy. Now we're not the only ones out there. There's a handful of others. I think they may not call themselves what I'm calling us, but and frankly I don't think they do it as well. But there are others like it. So I'm just going to talk in general about what we bring to the table and also cons. The pros, combines multi-lender platforms, individual lenders, and self-financed in-house payment plans to create the best possible customer financing solution together for a business. So we're not married to anything. We have our core platform, but we also have other platforms and other a la carte lenders. We have in-house payment options for those businesses that want to say, I want to design my own payment plan and be able to approve everyone. So we're able to not, we don't have to fit square pegs into round holes. We can actually design, if you qualify, a platform for you that matches what your business needs to cover as many consumers as possible. So isn't that what this is all about, right? You don't want to have to turn anyone away if you had your druthers, but certainly you want to minimize the number of people that you turn away. We can provide multiple lenders for almost every business, regardless of size, age, method of sale, etc. So our criteria to get you into a platform is very, very low. I don't care if you opened up your business yesterday, as long as you're a real business, we can set you up with finance. Now, we have a few verticals that we don't go into. Yeah, very few, maybe three or four verticals. But for the most part, if you're in business, a legitimate business, we can get you in. I don't care how long you've been in business, how you do your business, whether it's in a store or a kitchen table, over the phone, over the internet. It doesn't make a difference to us. And the size doesn't matter, and nothing really matters as long as you're a legitimate business. We want to help you get to that next level. We're on the cutting edge of the changing landscape. So as new lenders become available, our clients get the benefit of those new opportunities. So we're just not gonna stick you with something and that's all you're gonna get. Our clients will often get emails and notifications from us. We have this new opportunity. You're welcome to apply for it. Um, we manage the lender application process and boarding for the business. So we can't make it pain free, but we try to minimize it as much as possible. So we're going to work with you on getting, whatever application or paperwork or documentation you need together to make the process as smooth as possible and to make it so it's not totally a one-off. We focus on supporting the transaction from consumer application through funding. So unlike a lot of these platforms, we will work with you from the time you market your consumer. I mean, literally from the time you attract that consumer or that customer to your business until the time your transaction is done. Some businesses want us involved less, and we'll try to follow your lead and say, all right, here's what here's what we want from you, and we'll pull back. Or some businesses don't need it. They've been doing this a while, they have their systems down. But we're going to work with you at whatever level you want us to work with you. And we provide ongoing coaching support to assist businesses that are less experienced with customer financing. So as I mentioned, not every business has a lot of customer financing. So if you walk into a big business, let's say you're in the furniture business, I mean, you're looking for furniture and you walk into a Rooms to Go, which was a big chain. If you're interested in financing, it's almost like a car dealership. They're gonna bring you to a financing manager who's gonna work with you and going to go over the options with you. 95% of businesses don't have that, right? So if you're the owner or the manager, you're rolling up your sleeves, or maybe the salesperson is rolling up their sleeves to try to help them with customer financing. We're there to support that process to whatever extent that you want to. And the cons: we charge a nominal startup fee for platform customization, co-branding, and setup. We're going to charge some fees above and beyond what the lender costs are. But I think in most cases, I think most of our businesses appreciate what we do to earn those fees. So that's like I said, we're not the only ones out there. There's others like us, and they do it somewhat differently. But this is what we are. So I want to give you some case studies, and I'm not going to go into great detail on these. These are on our website, by the way, too. So if you want to look at them, you can look at this. So, like I said, I'm going to go into some case studies of businesses that do things a little bit differently, not just the average business. So, here's a timeshare disposal business. We have quite a few in this industry, and this business has 81% of referred applicants are approved, and the company generates about $100,000 per month in revenue, additional revenue, just through the financing. So they earn revenues other ways, but just through the financing, it's over $1 million a year through Flexxbuy. And you may be familiar with this industry, or maybe you're not, but on TV you may see the commercials. If you're unhappy with your timeshare, we can get your timeshare canceled. Blah blah blah. There's a big demand for it, and there's a lot of businesses doing it, and we're very strong in this sector. So we have a truck driving school. Now, in general, vocational schools are one of the hardest categories because by nature, the people that are going through a vocational school are in transition. So often they're out of work, or maybe their credit's not great. But we have we have a few vocational schools that do very well, but this particular one that I'm using as an example generates about over $100,000 of approvals each month, and they got about a 45% approval rate on their application, which is very high for this sector. So, you know, different industries have different approval expectations. So if you're in home improvement, most home improvement companies in our platform will get 70 to 80% approval rates. Um, Vocational schools are on the lower end of that spectrum. The typically 20 to 25 is considered a success. But this particular business does very, very well. They've been with us for many, many years. So law firms are a very, very large category for us because they've been um, kind of the stepchild when it comes to customer financing. I think they're considered high risk. Lenders just don't want them. We have a lot of law firms that utilize customer financing, and there's nuances to it. But there's been some recent decisions by the Bar Association that basically has opened up customer financing. So it's a very large category for us. And so we do mostly small firms, although we have large national firms, that utilize us as well. Um, but this particular law firm generates about $25,600 in additional revenue each month through Flexxbuy, and they have an amazingly high approval rate of 92%, which is very high for attorneys. So attorneys, it's the kind of thing where depending on where your clients are coming from and what area of the law, the approval rates will vary widely from 25, 30% to over 90% as is the case here. So this is a business we have. This business sells barbecue smokers online, okay, and by phone. So they've been with us a short time, but this business they've submitted in 3 months 260 applications and received over $1.4 million in offers, and the approval rate is 43%, which is extremely high in this sector. So this is something I would never thought of when they joined. I didn't think much of it, but they're doing extremely well with us. And this is a company that's been around with us for a while. They're a fence company, and they market financing, and they do quite well with us. They generate about $24,000 of monthly revenue. You just using our financing. That's not including all their other ways that they get customers, and their approval rate is 70%. And this is a category. Those of you that have kids or aware of kids activities understand that sports coaching and sports development is a very, very large sector. Travel sports is a very expensive sector. And we have a few companies in this sector and coaching in general and self-improvement in general. So this business doesn't use us often, but the average ticket is $17,700, and the approval rate is very, very high. So they'll use us about once a month or twice a month, but the tickets are very high, and we're doing a great job for them, and the way they're utilizing it is quite interesting. So you're ready to add customer financing to your business. I've done a great job of explaining it. Let's assume. So what do you have to do? All right. So if you were going to go do this yourself, and I'm going to go through the steps. First, you have to do research to find the providers that are fit for your business. So you got to categorize your business. What industry are you in? How much revenue? How long you've been in business? How you sell your product? All the things that are important to these lenders. So you gotta find out where you fit. Does the provider work with your type of business? Does your business do enough annual revenue to qualify? So you got to find out what their minimum annual revenue requirement is, and they'll tell you if you contact them. Has the business been in existence long enough? Do they require you to be in business for 1 year or 2 years or longer? Do you sell in a way that is suitable for the provider? Do you sell through a store, kitchen table, phone, internet, and however you sell, are they able to accept that way of selling? Does your business have a good reputation online and offline? If you haven't Googled your business, do it. Find out what your reputation is. See if you have, how many stars you have in ratings. How about your social media? How you doing in there? Do you have a lot of complaints? If you have a reputation that's spotty, most of the lenders are going to have an issue with you because that's what they're going by. Because there's a correlation, especially for the lenders that fund you directly. So there's a correlation between defaults and the happiness of a customer. Somebody who's dissatisfied and takes out financing to buy your product or service, if they become dissatisfied, the need for them to continue paying in their mind goes down, especially if their credit is not that great in the first place. So if they're using a no credit check program because their credit's not great and they buy furniture and the sale is a mess, the furniture's bad at the end, they're just going to stop making the payments, and these lenders know it. And how is your credit report? Not every lender will pull a credit, but some of the lenders do. And you should find that out, especially if that's a concern for you. And in my experience with business owners, a lot of business owners don't have the greatest credit because being in business is tough. This is not easy. It's not for the weak of heart. So a lot of business owners, they may be running a successful business, but their credit took a hit along the way. So if you fall into that category, it doesn't mean you're going to be disqualified from these lenders. It just means that you have to be aware of it. So second step is, now you found them. Now you have to go and get their application. They each have some kind of vendor merchant application. Do the application. Get the necessary support documents, whether they require business license, voided check, pictures of your business, bank statements in some cases, invoices, photo ID. Sometimes they may want somebody to come by and interview you. Whatever the process is, get that process going. Third, wait for your decision. Some lenders do it fast, days, some it's weeks. If approved, go through their training. So there's going to be some kind of training orientation. There's going to be, they're going to set you up, give you a website to submit applications through, send you a tablet, whatever the system is, then you have to go through that. And then you got to repeat it for each provider if you want to cover your bases, as I have suggested. So if you want to cover all your customers from A to Z, or as many of them as possible, you got to get lenders that are representative of each one of those categories. So unless you go to one of those one of those built platforms already. But for the most part, if you're going to go to a lender, you got to go and get one for each one of those categories, or at least try. And then develop a marketing and sales strategy to maximize the impact of financing. So some of these lenders will send you some marketing materials, but most of them are not going to roll up their sleeves and help you figure out how to use it. So that's something to take into consideration too. So you're going to have to do your research, figure out the best practices, and this is why most of the businesses that utilize financing just utilize the okay method which is, I'm just going to pull it out when when I need it. So that's the way you can set up yourself for customer financing. Or you can use someone like Flexxbuy, and we do these steps for you, right? So, again, a little self-promotion. We do the application. We make it very easy. It's an online boarding process. We'll get you set up typically within 24 to 48 hours to offer some kind of financing. If there's other programs that you are qualified for, we'll go through that process for you. You don't have to do your vetting. We'll tell you whether or not you have a good chance of qualifying based on your revenue, age, all that other stuff. So we can do a lot of that legwork for you and get you set up with the best possible solution. We'll help you with your marketing and sales strategy and best practices of how to use financing. So we're basically a built-in package that does all this. So like I said, there may be others that do it. I don't think they do it as well, but that's just me. But some of you may have other experiences. So that's basically it. So whether through Flexxbuy or another provider, I encourage you to invest in a robust customer financing solution. Really work it. Think about it as a marketing and sales solution, not just a resource like credit card processing. Today, if you're not offering this, you're losing revenue. I can guarantee that you're losing revenue. You may not know it, and you may never know it, because it's not like people are going to come in and ask you for financing. Some of them may, but most of them are eliminating you if you don't offer it in the first place. The economy is going to go down again, right? So there's going to be a recession somewhere down the road. This is the longest stretch of time where we've gone without a recession. So there's going to be a recession again. So you have to have as many tools in your toolbox as possible. in order to get as many customers as possible, because if there's another recession, people's belts are going to tighten again. So, be prepared, get ready now, do what you got to do. Here's the contact information to get in touch with us. You can go to flexbuy.com. You can call us. Um, you can go to our program details, the flexbuy.com, credit select plus 2-4. Um, email me if you want to. But basically, get in touch with us if you want our help, or get going and get the process going in some other way in order to get customer financing in place for your business to get the best possible outcome. So once again, this is Bob Lovinger. I'm the president and founder of Flexxbuy. We're here to help you, but my goal today was to try to show you how customer financing can make a difference for your business, and hopefully I accomplished that. Take care and have a great day.